Yeah, guys, we call it theta targeting is what we call it. And theta targeting is basically we target cash flow. Now, obviously, that is not a guarantee of gains because anybody who knows if you've ever done a credit spread or if you've ever done a covered call or if you've ever done a naked put, that's you get positive theta, but that does not guarantee you a positive gain because you still got direction. First and foremost, guys, everybody in the chat write down delta. Everybody write down delta. There are two things that we look at in our portfolio. Two of the first numbers we look at in our portfolio. The first number I always look at in my portfolio is this number right here, and that is the delta number. The delta number tells you the directional posture in your portfolio. So if I had $100,000 in my account and my delta was a 268 delta, that would tell me I am slightly bullish. Okay, that would tell me I'm slightly bullish. Now, for those of you who do not have the portfolio calculator, you know you can get that at Tackle Trading. It's also on the Gold Key. And so all you have to do is plug in those numbers, and it tells you how bullish you are. So just go, look at that portfolio journal that we have over there at Tackle Trading. It's also on the Gold Key for you legacy members as well. And you just plug in your account size, you plug in your delta number. It tells you how bullish, how bearish, how neutral you are. So that would be a slightly bullish delta. Now, in a bullish environment like we have here today, in a bullish environment, what does that tell me? Does that tell me that my portfolio is doing okay? Does that tell me, what does that tell me? In a bullish environment and my delta is slightly bullish. It's pretty good. It's pretty good. But does it also tell me I could add a few more bullish trades perhaps? Yeah. Yeah, because it's only slightly bullish. We're in a very bullish environment right now. So because of that, it tells me that I could go find some more bullish trades. Now, if I had 1,000 delta in this portfolio, then that would tell me I'm very bullish and I might want to, tap on the brakes a little bit. So what delta tells us, guys, is the directional posture of our portfolio. And what it really tells us is what types of trades do we need? Do we need bullish trades? Do we need bearish trades? Do we need neutral trades? So what this tells me is I probably need bullish trades is what that tells me. Now the second number we look at is this number right here, and that is the theta number, and that tells you whether you are positive cash flow in the portfolio or if you are negative cash flow in the portfolio. Now for us coaches here at Tackle, which one do we constantly have? Which one do we constantly preach? Which one does it drive us nuts if we don't have? Yeah, we want positive theta, right? We want positive theta. So this tells me I'm cash flowing $116 a day. So what I want you to think about, guys, is of the profit loss today in this virtual trader, we made $218, right? We made $218. Of that $218, 116 of it was because of cash flow. It was because of the options we had sold. Those are decaying in value. Now, obviously, a lot of that is just this, the naked put I have here on crude oil. But the reality is that tells me that over half of the cash I made today in this was because of theta. Does that make sense, everybody? Now, we now know if we're wanting to look for new trades and we want positive theta, do we want positive bullish theta? Oh, I have AMD in my real portfolio there, Anshul. I'm not liking it right now, but it is cash flowing for me. So in terms of this, I know I need bullish trades and I want more positive theta. So what type of strategies could I go to find new bullish theta strategies? New bullish that would give me bullish delta and that would give me positive theta. What are the types of strategies that we could do? Okay, bull puts.
See if we get them
good.
all here, Matt. Good.
Okay, naked puts, good. Okay, naked put, good. Covered calls, right? So your three kind of core here, guys, are covered calls, naked puts, and bull put spreads. Those are your three core techniques. And then you have other calendar spreads and diagonal spreads and all the other advanced ones. But I would say those are your three core, is your naked put, your covered calls, and your bull puts. So what we want to do now, guys, for the rest of the time is we want to take a couple of these stocks, right, off the Tackle 25 list. How many of you guys are enjoying the 2017 edition of the Tackle 25? It's been good. It's been real good, right? Okay. By the way, we're going to start working on the 2018 version first week in December. Okay, first week in December, and we will have that list out there for the first week in January, guys. So we'll definitely do a big coaches show when we release that list as well. But in terms of this, we're going to go to this list, right? I'm going to pull up the current list right here, and we're going to take a couple of these stocks. We're going to take one of them, a high dollar stock, and we're going to take one that's a little cheaper stock, and we're going to analyze how to add more bullish trades. Will that help you guys? How to add more bullish theta trades? Okay, Tim. First and foremost, let's start with the more expensive one, right? So let's go BABA.
I like
okay.
that one. Yep.
How many of you guys have ever traded BABA? Yeah, BABA's a good one. BABA's a good one. Okay. So here I got BABA, right? Here I got BABA. And I'm going to go through all three of the trades. Okay. I'm going to go through all three of the trades. So here we got BABA, nice little bullish stock, breaking out right now. Good. It's after earnings. Everything's very consistent. Not a lot of volatility. Not a lot of up and down. I can trust this, right? I can trust this. So if I look at kind of these three strategies, the first one we're going to analyze is the naked put. Okay. So everybody type in naked put. That's the first one we're going to analyze. So I'm going to do these all on 30-day numbers. Okay. So and I'm just going to apply the rules. Okay. So if I go and I sell the 180 contract on a naked put, somebody is going to pay me $153. Okay, somebody's going to pay me $153. Now the collateral I have to put up is $2,695. So I'm going to receive a cash flow of $153. My margin requirement is $2,695. So if you're looking at that from a return on investment perspective, $153 divided by the investment of $2,695, you got a 5.6 rate of return.
Let's have everybody type that in the chat there, Matt. 5.6 yep. ROI. And let's do that, guys. Let's make sure we go through these details, we understand it, and type in naked put. 5.6 ROI naked put.
Okay, now we have an 81% probability of simply cash flowing the 5.6 rate of return. And can everybody agree that that is a good trade? 5.6% ROI on 81% probability on a 31-day number. Yeah, that's a good trade. Now, if I do that trade, what price am I willing to buy the stock at? What price? $180. So if I'm not willing to buy this at $180, should I ever sell that naked put? No, never. Okay. Now, the risk here is what? In the 19% likelihood that the stock goes underneath 180, and if it goes down to 170, for example, we still have to buy it at 180, right? But I still like that trade. The second trade is we just buy the stock at 190.90. So we buy the stock at 190.90. We rent out the stock at the 40-day number, and we cash flow $370. Okay, so if I buy this stock at $1,990 in a margin account, I have to put in about $10,000, which means if I'm cash flowing $370, that's a 3.7% ROI. So is a 3.7% ROI, is that a good trade if I'm doing the covered call?
Yeah, it's really good. So type in covered call 3.7% ROI in the chat.
Okay, now the thing is, guys, okay, the thing is I'm covered on the position, number one. Number two, okay, in looking at the covered call, I now own the stock. I have to put up a little bit more of cash investment. Well, not a little bit more. We have to put in about, $7,305, but we're receiving more than twice the cash flow. So even though it's a slightly less ROI, we're getting more than double the cash flow. Okay, $153 versus $370. So is that a good trade?
Now, Matt, just read out the theta number for both of those strikes you chose.
Okay, the theta number for the 195 on the call would be 8. The theta number for the naked put would be 6. Okay, so the theta number for the covered call would be 8, and the theta number for the naked put would be 6. So that would add more theta to my account, 6 more theta or 8 more theta, that type of thing. Does that make sense, everybody?
Hmm.
The algorithm is very specific in that. Okay,